All right, welcome back. Got a fun one today. A friend of mine that also does YouTube knows me pretty well and knows that I enjoy trading, and that's kind of my favorite part of the whole financial world. And that would be a great thing to do, kind of a journey to bring you guys along with, to show you what I trade, how I trade, and go from there. And I hope it'll help you out, or at least give you the confidence that it's really not that difficult, or it can be as difficult as you want to make it. Let's begin. Trade the plan, or plan the trade. Trade the plan is of course the big one. I can't tell you how many clients I've spoke with over the last 10 years in the industry um, that weren't working with me to do it for them, and were do-it-yourself investors. And when you ask them, do they journal? Do they have a plan? Do they have a profit target? When are they getting out? Simple questions like that. It's just like, oh, whenever I feel like it, or when my friend tells me, or when it, makes more. And so that just leads to some bad trading habits. And ends up still being, more gambling than trading and investing. And they never just really feel confident in what they're doing. 2020 is actually year number 4 for me. I traded in 2017, 2018, 2019, and then this year in 2020. Traded a little bit before that with some Forex, but don't have great notes of that. Actually, I think I do have some pretty good Excel spreadsheets in that of that. But I'm starting from when I traded options, because that's what we're going to talk about. That's really all I trade nowadays. And so here we go. So this is the kind of flyby, the bullets here of the building blocks of how I go about trading, what I trade, how I get into the trade, when I get out of the trade, what types of trades I'm looking to do, how I find my ideas, how much capital do I risk on any one position, how much capital do I risk overall, etc. Just kind of working down through here. Like I said, I pretty much trade options exclusively. I really fell in love with selling premium, and we'll talk more about that later as to why. But the benefit with options is a lot of people are scared of them, but they are just incredibly flexible in however you want to trade. If you want the big wins, you can buy long options. If you want smaller wins but more consistently, you can sell some premium, and just a variety in between. So really, regardless of what type of trader you are, which I think is a big thing that a lot of people don't think about, is, are you the one that's too busy with everything else going on in the world, but you do still want to maintain? You can trade options. You can do, every quarter, every 90 days, you can have options that you need to adjust or look at. So very low time commitment. You can day trade options. You can be staring at the screen on every minute tick if you want to, and that's definitely more of a rush. If you're more the adrenaline junkie, that's for you. I've kind of found out in my trading that I like to be a bit more hands off, a little bit more set and forget, so I can walk away, or I can forget about the markets for the day, and I'm not going to get hurt too terribly by mismanaging something or missing a particular move, because you can see right here my days to expiration. My typical trade I put on will last potentially 30 to 45 days. It can go a little bit longer if it's going, against me, and I'm having to manage by rolling those options out. And there's going to be a lot of lingo here, so forgive me, but we'll do some more videos on that to explain, like rolling out, days to expiration, iron flies, the different types of strategies we're using. So bear with me here, but I just kind of fell in love with selling premium. I sell 30 to 45 days out. I believe, and I'll do a video or two on my reviewing my results as well. Because there's of the 4 years, I've lost 2 of the years, and I've won 2 of the years. The winning years have luckily have been much larger than the losing years. But you learn a lot in trading, and I've learned a lot about myself, as well as trading itself, and have gotten better with each year. So hopefully 2021, or I know, not hopefully, 2021 is going to be even better. But with over those 4 or 5 years of trading, I've learned how I like to trade, and this is what I've settled on. So if you like it, great. If you like parts of it, great. If you don't like any of it, and you tell me, screw you, Matt, I'm going to go do stocks like a bunch of other people, or futures, or what have you, great. Doesn't matter to me. I just love running into traders. I love talking about it, and it's different. And a lot of people, it's usually, you got a hot stock pick. No, but you want to talk about how the delta changed on the SPY options last week and how you could have made 400% in 5 minutes. Great, let's talk about it. Or great, I put on 5 minutes a day. I look at the markets and I'm up 30% for the year. Okay, well, like those are all fun things, but it's the way I trade is just quite a bit different than the hey, what's a hot stock pick? And so, yeah, so here we go. Again, I sell premium, typically call and put spreads, credit spreads, and then iron condors as well. And really, and we're gonna kind of forget about iron flies for now, but I do iron flies for earnings trades. I really had some success with that the last year. At that, but that's a whole video in itself, so we'll get to that another time. But calls and puts. So I find my ideas by using Thinkorswim scanning tools. I just scan for a couple of basic things, make sure there's a lot of volume, so there's a lot of liquidity, making sure that I can get in and out as I please. Um, and then implied volatility. So making sure the volatility has spiked for whatever reason, and that there's no earnings coming up on those particular on typical trades within at least 25 days. I found out that I usually close my trades, even though I put them on for 30 to 45 days. On average, I close them at about 16 to 18 days. So as long as earnings aren't within 25 days, it won't mess with the volatility, and it's just been beneficial for me. And so the scanning tool tells me spikes of volatility, and then from there I can look at a chart and see. I like to follow kind of mean reversion. So if something is overextended, it's had a great rally, I'll be looking to sell call spreads. And if it's fallen off from grace for whatever reason, I'll check the news maybe a little bit to see if it's something just a downgrade by somebody, or if it's a more um, fundamental piece. But again, I'm not digging into fundamentals. I'm just looking at the news real quick. If it's a headline like, um, you know, company CEO did some shady stuff, and ultimately the company's not real and it's an Enron. Well, then no, I'm not going to mess with it at all. But typically that's not the case, especially with these that are bigger market caps, higher volumes, bigger names. They're not in the news for those kind of shady things. So if it's up big, I'll usually sell a call spread. If it's down big, I'll usually sell a put spread, assuming it will rally from that point to some degree, or at least hold that position. And then if it's kind of in the middle, that's when I'll sell an iron condor and I'll grab both sides, a call spread on top and a put spread on bottom. And those take usually a little longer to get to profit targets, but still good to have, and obviously just pretty neutral strategies. I like to stay delta neutral and theta positive. So theta is a Greek for the passage of time and how time affects options. And so theta positive meaning with each passing day that's beneficial to me because I'm selling the premium. So I like that. And then delta neutral. So with selling put call spreads, you're usually going to have negative deltas. You're expecting the market or that particular stock to come down. And selling puts, you're expecting the stock or the market to go up. Condors are kind of right in the middle. You want them to stay in a range. So I combine all three of those to try to keep a neutral to slightly net negative position, because markets crash down, they don't crash up. So that's kind of the piece I've learned from Tasty Trade and my research in that over the years is just being a little negative. It does pull down on the returns a little bit because the markets overall typically go up. But when those crashes do happen, it's good to be a little negative. So that's why I like to have the general portfolio. I do occasionally do a short put if I just don't have any, have a lot of cash sitting on the sides and just need to get some to work. I'll look at doing a short put, um, just on something that I like, one of the core positions. Um, and covered calls, very rarely. I'm in one now because I had cash to buy some calls on QQQ back in March and let that rally, and then now it's kind of well, I thought a couple months ago it had kind of petered out, and so I started selling covered calls to bring in more income. That kind of bit me in the ass a little bit, but that's all right. It's still done really well for me over time. And usually I don't like to buy stocks, so I usually do poor man's covered calls, where you'll buy a deep in the money option, deep in the money call, and then you'll sell a call against it each month to try to pay it off. And that, and again, another video for that. Minimum premium. So even though the volatility spiked and usually premium is higher, I don't like to get into a position for anything less than 15% of the capital risked. So if I'm risking $500, I'm typically now I've bumped it up to 1,000 per position. I want at least $150 of credit received for that risk taken. And so usually it's a bit higher, but that's the minimum for it. And I've been pretty good about sticking to that. I'm actually probably averaging closer to 20 or more percent, just because again these volatility spikes, something's occurring that's making them more advantageous for premium sellers. But I do have that minimum set in my plan. Mean reversion we already talked about. Profit target. So once I sell the premium, I'm trying to close out before zero. I don't want to wait till zero. Those last couple of pennies can really be costly because you can reset the trade for a fresh credit, and it's just been proven that if you limit your profit and you close the position earlier than max profit, you can increase your win rate pretty drastically. So I initially learned and started doing 50% profit targets for just regular spreads, the calls and puts, and then about 30% on iron condors. But I've increased the spreads up to about 70% because I've noticed in my own research as I review each year. So definitely, journal and write your stuff down and do what works for you. What I've learned is that the call spreads and put spreads, when they're going in my favor, if they hit my 50% target, they usually hit 75 or more percent like the next day. So it seemed like money being left on the table, and for me it was, so I moved that up. And Iron Condor is the same. I just realized there was a bunch of money being left on the table, and for the few percentage points of win rate that I'm losing by increasing my profit target is offset by the extra profit. So risk management, of course, that's always adjusting and moving, but it's kind of mixed in here. We've talked about it a little bit. I like to stay delta neutral, so I don't care too much about the market going up or down. I base that off the SPY or SPX for that, so the general market. I roll out when tested. So if I sell a put spread and the stock is not cooperating right off the bat, and maybe it comes up a little bit further, or sell the put spread comes down a little bit further to get close to my short strike, I will roll that out, at least another 30 days, if not further, as long as I can get a credit, just to give myself more time to be right. If I can't roll it out for a credit, I'll readjust to look to see if I can close it out for a profit or close it out for a small loss now, then I will. Or maybe look at some technicals, some chart patterns to see if it's still looking bullish, and therefore I'll just kind of let it go, and hopefully it'll work out by the end to make some sort of profit. And if not, and if it's looking terrible, and I've got to reassess from 2 weeks ago when I put the trade on, then I'll probably close it and get out. Core positions and satellites. So I've been working to build core positions that I always have on. So this year it's been some Amazon, it's been some SPY, but I haven't really had a good set of cores. But I like the thought of core positions, because then you really get to know the stock. You're watching it on a regular basis. You feel the breaths and the movements of it, and you can kind of tell. And the stock market is a living thing. I mean, you can really tell. Okay, that was a fluke. It's going to come back down, or it's going to go back up, or this is a move it does on a regular basis. So that just makes you more comfortable. And I'm trying to ultimately, quit my jobs and live off trading. And so a core position to have some income, or if you're trying to draw income off the portfolio, having a core position to bring in income that's consistent is good. And then satellites is anything else that pops up on the scanner. So earnings trades, any sort of news that spikes, whether it's a pharmaceutical company or what have you, that's everything else. So it's, if I had to weight it, it's probably 10 or 15% core, 80 or 85, 90% satellites. But it's good just to keep something on. So, and I also try to put on a trade, at least one trade every day. Whether that's a closing trade or opening trade, doesn't matter too much. It's just something to keep me engaged and been paying attention to the market. And then lastly here, I try to keep 50 to 65% invested, meaning that I have 35 to 50% in cash in the account, ready to move. And that flexibility is huge. I learned the first year that if you spend too much of your cash and you just don't leave enough there, and you get into a bit of a bind, then it's gonna hurt. I lost a bunch of money in Amazon 2 years ago, maybe 3 years ago, just because I didn't have the capital to roll the position out to a further week to give myself more time. And of course, when you know it, Amazon came back beautifully. It would have been a max profit trade instead of a max loss, and so just that flexibility is something I've learned over time. And so that's why I only use 50 to 60% of the cash in the account at any given time. Yeah, and I think that's about it. That's a great start. I'm sure I missed some stuff. I've tried to write down my trading plan specifically for years now, and it just there's always there's too many moving parts. There's too many things that come up that are unique. Because I read one time that I'd love to be able to just hand this bulleted list or if then statement to someone else and see if they can trade it just as well. And it's just really tricky. But I'm hoping that I obviously love to talk about this if you can't tell already. But I also had a lot of things in the last 4 years that were just dumb mistakes, things that I shouldn't have done. I knew I was doing the wrong thing at the time, but I got caught up in it. I wanted to gamble. I saw some YouTube thing about how some kid made $1 million on Tesla and has no idea what he's doing. And I was like, oh well, I can look at some charts and some stuff looks here, and so I'm hoping that kind of talking to you guys about it, I'll stick to the plan better um, with it, which would obviously help me tremendously moving forward. Because trade the plan or plan the trade the plan, and my notes sure show every time I deviate from the plan, it always bites me in the ass. So, but yeah, I appreciate you listening and sticking with me. Obviously, love to answer any questions you have, and there'll be a lot more videos ongoing. I'm planning about once a week to give you an update on the portfolio, the trades I made, why I made them, what I'm thinking, what's going on. And also a lot more videos on all the different buzzwords that we used here: iron flies, iron condors, premium, mean reversion, days to expiration, theta, delta, a lot of stuff going on here. So appreciate it. Stick with me and love to hear your comments in that. And appreciate if you leave me a like so that we can grow and do this together. Thank you. Bye.